Okay, this is silver on the daily scale. We have witnessed quite a bit of shakeout here, dramatic price action recently. Silver knocked its head against the descending line here on the daily. Silver is stronger than gold. Silver is still maintaining the possibility of taking this as 1, 2, 3. Okay, this is still viable. I'm going to show you the details. Silver will go into a completely different world if it breaks 17.2, which is right here, this line. What I'm saying is silver will confirm that we are not dealing with a 5-wave run, but rather with an ABC. And that will be big news. But what I think is going to happen is that if silver makes it towards 17.2, by then gold will confirm that it is in an ABC. So we would have to deal with the consequences of that. Right now, neither of them has confirmed that. We are still in a situation that could favor the bulls, but it is sitting right there. It's hanging there in the balance. Yes, I think within a day or two we should have an answer. If silver manages to run back to the previous high, it's probably saved for the bulls. We are dealing with a 1, 2, 3, and that's a 4th wave. And we are probably going to hang around here for about a week and then continue higher. If silver can't make it and it deteriorates, and as I said, gold will probably lead the way down because gold is weaker, then we're going to eventually see silver over time, over the next 2-3 months, silver drifting lower and lower, okay, because that will have to be taken as an ABC. Let's now go and see the 60 minutes. And you see this very dramatic drop that often is designed to shake out, frighten a lot of investors. It could be just one of those instances. We don't know yet. We have to wait patiently on Mr. Market and see what its verdict. Here's the interpretation so far. That's 108.2B on the 60 minutes. We run up third wave ending here, and that could be taken as an okay ABC. Yes, this could be taken as an okay ABC. Running back, I would say, towards 18.2 is already a sign of strength. I don't like, in terms of the general structure here, I don't like the fact that it broke decisively this level. And I certainly don't like, in the case of gold, that it broke some serious support levels. When I say I don't like, I speak as a bull. This is not terribly exciting to see it breaking that. It would have looked much stronger if it had a serious bounce from this zone. But it's not that. It could still happen. I mean, for the bulls, it can still be resurrected here. If it goes and eventually does something like that, then everything is fine. That was your extreme corrective low, okay, and it ran towards the 0.5. You see, 50% retracement, didn't quite make it. 50% retracement of this surge. But if it comes back, then everything is back on track for the bulls, and we will be heading higher. Sorry, I will show you here on the silver chart. I put the ABC, but of course there is an alternative. The alternative is that it will not play out for the bulls. The alternative is that it'll do something like that. Do you see? That it'll come down and will just not have the strength to continue up here, and it'll just go sideways, and then it'll give you this kind of drop. That's very negative. You already see what that would yield. That'll give you a 1, 2, 3, 4, 5. That's bad. That's bad. Even if it doesn't break the 17.2 level, gold will probably do that, and then it'll get a bounce like that, and before you know it, it's going to crash big time like that. That'll be you A, B, C, or 1, 2, 3. Now we can look at gold. That's the daily. Gold broke quite a bit. We're still in a position to work with A01, B02, with this being an ABC. Fine, this is still holding. That's 1, that's 2, that's 3. But it fell quite a bit. That is the daily, and you can see the 200 moving average is coming right here. That's the 50. That's the 21 in black. And I'm going to zoom in to the 60 minutes. So you're going to see the various options that I think are possible here. Okay, so here's our 108 2OB, we have our 1, 2, 3, 4, 5. When I said earlier that I don't like that silver and of course gold broke the level of the apex, that's what I mean. You see it absolutely crashed through this level, and the critical level for gold that you must have marked on your chart, you must have this level marked. It's right here. It's 1218. Do you see? It's the top of the previous first leg. If gold crashes through this level, it's over for the bulls. Yes, it's over for now for the bulls. There is no question in the world. It breaks through this level, that'll be very negative. Okay, at this point in time, as I'm talking to you, and the market of course is closed, we are in a position where both options are still alive. This could be taken as a 1-2 that's down in a 3 that will morph into a 4th wave, and then the bear will pop its head again. Or that could be an ABC, in which case gold is going to come back to life, and I think running back about 1249 right here would be a good sign that gold is back, the bull is back in business here. Okay, that will be 1, 2, 3, and we can allow for sideways price action for a long time. Okay, I'm talking about several weeks. I'm going to go now to the 15 minutes and try to show you the very short term. You see, I think we had a 1-2 build up here. For this we'll have to see the 5 minutes, but first take a look here. The option, there are several options basically here. That is taken 1, 2, 3, 4, 5. That will be a complete first leg down of a new bar. Okay, you ignore the 2 and the 1 and the A and the B. You completely ignore that. You just go with 1, 2. That's 3. That's 4. That's 5. So gold could correct here, but in my opinion it's not going to establish a base above 1249. If this is a first leg down of a major move down, it's not going to achieve that. I don't think so. That will be too much strength. So I think that what could happen is this. You would have sorry, you'll have the 5 legs complete. So that instead of being 1, or let's say A inside a bigger correction, that'll be A that relates to this as a first leg down. That'll be your A, then that'll be your B, and then that'll be your C. That'll probably get a knock from the overhead resistance here, and then it goes down in a major break. Let me just clean out this so that you can see, not get confused with all these arrows. Right here, you see, you'll have an A, you'll have a B, you have a C. That's your first leg down. Could be 1 or A. That'll be A, B, C, 2 or B. The thing is that if it doesn't make it about 1249, it's almost certainly going to break through, and it's going to break through the floor here, and the bears are going to be in control for the next several months at least. Okay, so that's the idea. If it is going to play for the bulls, we are going to have that, and eventually we're going to retest the high, even though it might not exceed that immediately, but that will be extremely bullish sign. Even if it comes back after that, it is a matter of lateral movement that will yield the 4th wave, after which we are likely to see gold continuing higher. Here I'm going to run back to the daily to show you that this could take quite a bit of time. You see, staying around here could take quite a bit of time. As long as it stays away from this line, it's still alive. This wave count of a 1, 2, 3, 4 is still alive for the bulls. Now here's GLD. That is the weekly scale. Here I'm going to present a completely different wave count that I've already, I think, presented in the past. It is, I'm afraid, terribly gloomy for the gold bulls, silver bulls. It's terribly gloomy, and many doubt that it's possible. But you always want to be objective. You always want to keep your mind open. You want to allow for the other side of the coin to show its face. You are not going to live with a one-way street mentality. It's just bad. It's just, it's bad for scientists, it's bad for traders, it's just bad in life. To be a fanatic locked on one side is just not a good idea. If you ask me, it's just not prudent. So you always want to be careful and watch out for alternative or divergent point of view, etc. Okay, so we came down from the top here in 2011. We run down towards the end of 2015. We scored the bottom, and all of that could be taken as an A without going through all the details. That will be taken as an A. And in fact, what we have been doing since is as follows. We have been tracing a bunch of ABCs, and that's not necessarily terribly exciting. With this being an ABC, that is taken as an A. That's an ABC taken as a B. The run-up that we have seen recently should be taken as an ABC, because the assumption is that gold is not going to hold. Gold and silver are going to succumb to selling pressure, and they're going to break down. And in the case of GLD, it shows that it's going to stay above 108, okay, 108, which is in the case of gold 1080, okay, and then we're going to get another bounce, and that will terminate an A, B, C, D, E, and that is terribly negative, because that would assume that the B is finished. Now that will take quite a few months. You can see that easily. It's going to take at least 2-3 months, maybe more, and then we're going to break through the floor. We're going to break through the bottom that we registered in late 2015. Now there is an optimistic twist here, which would be optimistic short term but not long term, and here's what I have in mind. Suppose I'm wrong in my ABC interpretation here, and I'm actually supposed to take this as 5-leg run, and in fact the previous move indeed ended here and didn't end somewhere around here, which would also make a difference in terms of the interpretation. Suppose it ended here. In that case, if that is 5-leg run, then what's going on here? Even if gold comes down towards 1080, yes, 108, but it doesn't break this level, okay, it keeps bouncing up and down here, then what's going to happen is that this A would have a B associated with it terminating here. Can you imagine this? That you'll have a B like that. That's an A, that's a B, and in fact gold will give us a surge C like that. That's an A, that's a B, and gold will indeed run above the high scored here in July and will give us a C like that. So I'm saying that will be bullish for quite a few months, but bearish long term, because when you have an ABC, the assumption is that eventually it's going to come down. Okay, now if you are interested in this, the one thing you have to watch very carefully is this level. You must watch very carefully this level, because if this level breaks, then it is very likely excluding the possibility of this ABC structure. Do you understand why? Yes, because a B is most likely going to hold the bottom here, and it's going to bounce around here and then going to give you that C. If it breaks through this level, then it just doesn't look right. It doesn't look right. It looks like the pressure is overwhelming and this is going to break eventually. Then it favors, of course, the option that the B will end somewhere around here rather than somewhere way higher here. Okay, this is for those who are interested in precious metals, it's well known. It's GDXJ. Okay, it's Vanek Vectors Junior Gold Miners ETF, and it is showing a fairly gloomy interpretation that I already touched on when I discussed the GLD, and on the weekly it is taking the entire surge that we have seen here as an ABC, and in fact it's busy tracing more ABCs as it is going in the direction of delivering a triangle, and that's not good. That's not good because it projects further downside. Some of you might say, how far can it go? It went down so low. Yeah, I wouldn't try to put my finger on a prediction how far or how low can the market go, because the market can go always lower than you think, or go higher than you think. You just have to follow it step by step and see as the structure develops, what is it telling us step by step. Here we go, that's an ABC. If that's correct, we have another AB, 1, 2, 3, 4, 5, C here on the daily. That's an ABC. That looks very much like a big break. Okay, if it continues down, I think we should have no doubt that's going down for a D. That's already looking pretty bad. Yeah, looking pretty bad. What's going to puncture all this idea of a bunch of ABCs here if it runs above this level? But it's got to do it fairly quickly. Okay, it runs back above this level, then there is a chance that I miss something here and it's going to continue with its rally there. But going down here, continuing to basically give us lateral movement in this zone would be negative, suggesting further lows are coming.